Hi Jay, good evening.
Hi Ramya, good evening.
How are you?
Good, how are you?
Good. Jay, sometime back we were discussing about how gold is perceived in India, and we said we would look at gold as an asset class, and the importance of it, how important it is in the Indian customs versus how it behaves as an asset class. So let's deep dive into it today.
Absolutely, Ramya. I think I still remember the day when we connected on this topic. It was truly an exciting discussion, and especially I think we watched Professor Aswath's video on gold as an asset. And like you rightly said, the community that we come from in India, I think back home, my grandma used to say that if you buy gold today, um, few years down the line it will double, and then few years later than that it will triple. So I mean, as a child I always thought that gold is an asset which will never fall down, meaning that it keeps continuously growing up, going up in price, and it will never have ups and downs like any other asset class. And also, I mean, to be candid here, until I started trading, for me, gold was like jewelry or gold coins and things like that. I mean, I was not exposed to something gold as a commodity which can be traded in as a future. And then now there are so many ETFs that
Right.
actually are tracking gold, or actually which owns gold as an asset, and then you can purchase that like the way that you would probably purchase a stock, and then
Or even like instead of purchasing gold coins or a gold bar or something.
Absolutely. I mean, gold sovereign bonds, I think, I became familiar once I started working and all that. But gold as an ETF, to be honest, only after I became I couldn't call myself professional trader, but at least after I started getting my hands wet into trading and all that. So it's a very, very interesting topic. And I think it's a very apt time for us to discuss that as well, having seen gold kind of skyrocket in the last few months or quarters. So possibly what we can do is we will probably take a look at one key chart which kind of struck so hard on me, where Professor Aswath has actually given the comparison of gold as an asset with various other things. Let's dive into that. So as you can see here, I think this chart is quite self-explanatory, uh, but still, what is interesting about this chart is this is actually giving a comparison of stocks versus bills, bonds across corporate bonds, treasury bonds, gold, even real estate, as a matter of fact. And what I also liked about this chart is the way Professor has compared actual inflation versus the unexpected inflation, and also how each of the asset classes perform. So you are kind of getting everything in one quick glance at it. And as you can see, I mean, he's compared it by decade. So that's why I brought in the example of what my grandma said, 10 years. I mean, if you buy gold and then 10 years down the line, it'll double, it'll triple and all that. But if you actually see here, that is not the case at all. Except for the year 1971 to 1980, where gold has gone up by 38.09 percentage. Some of the years it was even negative, and some of these, I mean, it has performed well, but how, in comparison to each of this, is something which we need to probably take a look at it. This
Mhm.
chart is not to say that gold is not a good investment class, but to say that gold is an asset class which also goes through the ups and downs, very similar to the way that stock market, or the more secured bonds or corporate bonds will perform. And also a good comparison of this versus the real estate as well. Only after seeing this video, I actually went and I know that gold has been going up quite high for the past few quarters or few months, and like we discussed, I mean, for us, when we go and buy, see, buying jewelries in the Indian context and things like that, there's an emotional attachment to it as well, right? You cannot measure or you cannot quantify emotions attached to something like that. I mean, your grandma's jewelry or your mom's jewelry and all
Yeah.
that
So
has
that
its
becomes
sentimental
more
value.
of a collectible. And then in
Absolutely.
India, it's also like a status symbol.
Spot on, Ramya. It is a status symbol, and but what we are trying to say here is gold is an asset class. It could be, gold coins, or it could be sovereign bonds, or it could even be the ETF, which has been trading for quite some time, which probably, many people are doing it, which I have kind of started looking at it, or at least we have from our group of investors, we have started looking at it very closely in the recent times. So this is an interesting chart to first of all digest. And then what I wanted to do was to go to Fidelity, and possibly this is the ETF which tracks gold. It is SPDR Gold Shares. It trades under the ticker symbol GLD. And if you actually look in the graph, and I have the max here, and it is tracking from 2006 to 2025.
Mhm.
See, that was, Professor Aswath's chart gave a summary with all data points of comparison and all that. This is just looking at gold as an asset class.
Yeah.
As you can see, I mean, we're not talking from 1941 here. We are just seeing the graph from 2006 here. It has gone up, and there were days, for example, if you had bought here for 1 year, it was actually depreciating.
Right.
And then from 2009 to 2012, it's gradually increased. And if you can actually see from 2012 to 2021, if we had bought somewhere here, it was like almost, it has come down and flat for close to a decade,
Right. Right. Yeah.
right?
So if you had bought at the highs of 2011 or 12, then for the next 10 years, you would not have made any money on gold.
Yes, and this is pure play GT as an ETF. In Indian context, if you're buying it as jewelry, and one is the issue with safely storing that, and also there is making charges, there is wastage and all that for making jewelry, and then you end up paying a lot of price for that as well, right? So everything together. So when
Mm.
we are looking at gold, this is like pure play gold, not in the context of buying some jewelry or having some sentimental attachment or emotional attachment to that asset class. Gold as an asset, I mean, like Professor Ashwath rightly says, it doesn't have cash flow and all that. Gold is a precious metal, and it keeps. I thought that it always keeps going up. It may never go to zero. Like some stocks, like penny stocks or risky stocks might go to zero. Gold might never go to zero. So it is a good hedge. But at the same time, gold as an asset class need to be, if I may say, if you are buying gold as an asset, need to be timed in some sense, that if you're buying it here, then you're actually breaking even only by 2021, which is almost like 10 years. And I mean, this video is not about whether to invest in gold or not invest in gold. This is just to look at the state of play and how gold has kind of gone up so much in the past few months or quarters, and then to see whether we are still interested in investing something in gold. And also, one of the key thing is, when you feel like, okay, I want to buy it at 300, but then I miss the chance, it is already gone to this
No,
much.
there are a couple of things they say, right? Like even Ashwath, Professor Ashwath mentioned in his video that a couple of times where gold performs better than other asset classes is one is if there is extreme inflation or if there is some economic uncertainty, right? So right now we are at a point where we don't know how things will go. Inflation seems to be increasing. We don't yet know the complete impact of the tariffs. So if somebody wanted to, do some investment in, say, the GLD ETF, but right now it has really skyrocketed in the last few months, and if I, from my point of view, I don't want to enter it right now considering, what if it's like a 2011 kind of situation where I'm like stuck in it for the next 10 years, right? So maybe I mean, of course, I can always wait for it to come down a little, but
Yeah.
I think with options, there is one other choice that we have, right?
Yes, you can I mean get paid for waiting for the right price. So tell me, Ramya, I mean what would be for GLD ETF is trading at what right now? Let's take a look. GLD ETF is right now at 375.96. Wow. That's really skyrocketed. Right? So what would be the price that you feel like you might be comfortable getting into
So,
GLD?
say like, it falls 10% from here, um, right? Like 10% from here will put it around the
340.
340 kind of a range.
37. Yeah. Maybe 335 or so. So I had what I had done is, I didn't say, yeah, 340 or 50.
Okay,
I had
350.
just modeled this for you before we start
Mhm.
our discussion. So you can get into a short put, and obviously, I mean, you will need to, if it is cash secured, you will need to set aside the strike price into 100 for getting it filled. I mean, for taking up the assignment. And if you're
Mhm.
playing on margins, it might be much less. So I'm not even looking at a very short dated one because GLD is not an ETF which is having super high premiums and all that. But
Mm.
this has an hedge for your portfolio and also to have some form of how do I say security for our stock based portfolio if we need to enter into it and if we miss the boat to enter it when it was at 350 or so. This is something which can be looked at where no, I didn't even say 6 months down the line, if this one comes down to 350
Mhm.
and for waiting because you don't want to enter gold because this 350 is actually technically will get you a premium of $850 or $8.50. So 350 minus $8.50 is the technically the price that you will want, which puts at your 10 percentage below the current price,
Right.
342, around 342 or so is the one that you will want. But if gold keeps going up continuously,
Mhm.
you get to retain the premium. At least you are in the game playing an option with GLD as an ETF, and you're holding this. And if it comes down and if you actually end up owning this, you're okay because you're not kind of shelling out, at the current price and waiting and probably picking it up at the price that you are comfortable with picking up GLD ETF. So that
Right.
way, that is one possibility. Then if it gets assigned, then how do you write it further? Whether you want to write a covered call later once you get assigned and all that. You can like the way that we discussed in our previous videos where we spoke about both covered calls and short put. So this is something
Right.
that which can be considered to own GLE ETF at the price that you want to own it. So I mean
Right.
that would
Yeah.
be my
Very interesting to see the dynamics between gold and other investment classes, and to understand that gold doesn't always appreciate, and there are times in the market where gold also goes down. Something very interesting.
if I had not looked at the chart, I would not have realized that no, from 2011 to 2021, it almost, I mean, if you had bought it at the high, it, you would have recovered only in 2021. Only when we did a deep dive after watching that video and then got into the charts. So it's a good learning. And but I mean, like we said, gold is an asset class and which it will never go to zero. It's about how we kind of use it as an edge or use it as an asset class which we absolutely want to hold it, or kind of go and buy gold bars or gold jewelry or whichever
Yeah.
is something that
And figure out how to store it.
figure out how to store it.
Yeah.
That's a pain,
Yeah.
I know. That
I'm
is a
not
good
even getting a bank locker these days, Jay. So this seems like a very good option.
this is much better. And then you can wear some fashion jewelry and then I mean these days they are so good and then you can just carry yourself and
Yeah,
very well with those fashion jewelry, and then probably invest in a GLD ETF, and also at the right price. I mean, the way that we have kind of modeled it, you don't want to
right.
buy it at 375 now. So great discussion. Always a pleasure.
Thank you.
Thank
Always,
you. Bye
Jay.
bye.
Have a good weekend. Bye.